China's economy is in crisis. That's not new news. It's a story that made headlines during much of the last year. Nor is it surprising. MacroWatch has made at least 20 videos explaining why China's great economic boom would inevitably bust. However, suddenly it seems that the entire world has woken up to the fact that the country that was the world's most rapidly growing superpower is no longer growing. Therefore, this is a good time to review why things are now going so terribly wrong for China and its economy. This video will focus on China's most glaring economic troubles, including the catastrophe in the country's all-important property market, China's shrinking population, and the exhaustion of the country's economic model, which is based on producing far more goods than its population can afford to buy and exporting the surplus abroad. These developments, exacerbated by President Xi's determination to bring the private sector back under the control of the Chinese Communist Party, have brought about a collapse of confidence within the country that will be hard to restore. Moreover, these very serious threats to China's economic stability are taking place at a time when China's most important trading partners, the United States and Europe, have come to view China as a geopolitical threat and accordingly are taking steps to decouple from China. In combination, these troubles appear far worse than those that put an end to Japan's economic growth in the early 1990s. Let's examine them in turn, beginning with the property meltdown. There's little wonder that China's property sector is in crisis. Chinese property is extraordinarily expensive and massively oversupplied. Given that this sector accounts for around 25% of China's GDP, the property meltdown alone is more than sufficient to bring China's economic growth to a standstill. China's real estate market is the largest asset class in the world, worth roughly $60 trillion, according to a recent NPR broadcast. The people in China store most of their wealth in property because there are few other investment opportunities that are open to them. Now, property prices are falling and wealth is being destroyed. Official data show low single-digit declines in residential property prices relative to 1 year ago. Other sources suggest falls ranging between 15% and 30% in some cities. China's property prices are extraordinarily high relative to other countries. For example, the house price to income ratio in Shanghai is 48 times the average annual salary. In Paris, it's 17 times, and in New York, it's 11 times. This chart shows that for China as a whole, the property price to income ratio is nearly 30 times. That compares with only 4 times in the US and 10 times in the UK. Such high property prices are difficult to reconcile with the fact that the oversupply of property in China is unprecedented in the history of the world. According to a recent article in Nikkei Asia, the level of excess stock reached just under 5 billion square meters at the end of 2023. China now has excess space to house 150 million people, equal to about 50 million homes. China's huge property bubble has been inflating for decades, but when President Xi announced that houses are for living in, not for speculating, and then prevented private sector property developers from accessing new credit in 2020, confidence in the sector collapsed. Sales plunged and prices began to fall. The amount of residential floor space sold in 2023 was about 40% from the peak in 2021.